When people hear beach housing market, they usually picture two extremes. Either it's insanely expensive oceanfront mansions that normal people can't touch, or it's tourist rentals that only make sense if you're already rich. Virginia Beach doesn't really fit either box, and that's exactly why it's interesting right now. This market sits in a weird middle ground where prices are higher than inland cities but still feel reachable compared to other coastal areas. And in 2025, moving into 2026, that balance is what's shaping everything. Virginia Beach isn't just a vacation town, it's a full-on working city with neighborhoods, schools, military bases, hospitals, office jobs, and long-term renters. That matters because it keeps demand steady even when tourism slows. You don't get that in a lot of beach towns. When the economy tightens, places that rely only on tourists get hit first. Virginia Beach tends to hold up better because people actually live here year-round. One thing you notice right away is that homes aren't sitting forever, but they're also not flying off the shelf overnight like they did a few years ago. That tells you the market is active but calmer. Buyers aren't panic bidding anymore, and sellers can't just throw out any price and expect it to stick. This is what a more normal market looks like, and honestly, it's healthier for everyone. Prices in Virginia Beach are still trending upward, but the pace has slowed. That's important. A slow climb usually signals stability, not weakness. It means buyers are still willing to pay, but they're more careful. And when you see that combined with slightly longer days on market, it usually means negotiations are back on the table, especially for homes that are overpriced or need work. Inventory is another big piece of the puzzle. There are more homes available than there were during the peak frenzy years, but supply is still tight in popular price ranges. Entry-level homes and well-kept family houses under certain price points get the most attention. That's where competition still shows up. Higher-end homes, luxury properties, and some beachfront listings are taking longer, which creates opportunities if you're patient. Now, let's talk about neighborhoods. Because Virginia Beach isn't one market, it's a bunch of mini-markets stitched together. Areas closer to the ocean command higher prices, especially places with walkability, water access, or established reputations. But if you move slightly inland, prices drop fast while rents stay strong. That's a key thing investors look at. When rents hold up better than purchase prices, the math starts making sense. Another factor people underestimate is the military presence. Virginia Beach has constant relocation cycles. That means new renters, new buyers, and people who need housing quickly. That kind of demand doesn't disappear just because interest rates move around. It creates a built-in floor for the market, especially for rentals and mid-range homes near bases and major roads. Rental demand is still strong overall, even though rents have cooled a bit in some pockets. That cooling isn't necessarily bad. It usually means tenants have more options, not that demand vanished. For investors, this can actually be a good thing because turnover slows down and long-term tenants become more common. Stable rent is often better than aggressively rising rent that scares people off. Another thing worth mentioning is that Virginia Beach isn't seeing extreme overbuilding. New construction exists, but it's controlled. There isn't endless land along the coast, and development is limited by geography. That naturally restricts supply over time. Long-term, that's one of the reasons coastal markets tend to hold value better than inland areas with unlimited sprawl. From a buyer's perspective, this market rewards patience and strategy. You can't just chase listings emotionally anymore. You need to look at days on market, price reductions, and neighborhood trends. Some sellers are realistic, others are still stuck in 2022. Knowing the difference saves you money. From a seller's side, pricing correctly matters more than ever. Homes that are priced right still move. Homes that aren't just sit and eventually cut price. Buyers are watching closely now. They notice when a home has been listed too long. One thing that's clear, moving toward 2026, is that Virginia Beach isn't collapsing, and it's not exploding either. It's adjusting. That adjustment phase is where smart decisions get made. People who understand the local dynamics, not just headlines, usually do better here. So, if you're thinking about buying, investing, or even just watching this market, the big takeaway from part 1 is this. Virginia Beach is stable, layered, and opportunity-driven, but only if you understand where to look. The beach itself tells only part of the story. The real action is happening just behind it. Now, what prices feel like in Virginia Beach right now? Because that tells you way more than just averages. The first thing you notice is that Virginia Beach is not cheap, but it's also not completely out of reach, the way a lot of coastal cities are. Compared to places like Southern California or parts of Florida, prices here still feel grounded. But compared to inland Virginia or smaller cities, you're definitely paying a coastal premium. What's interesting is how wide the price range is depending on location. You can have two houses that look similar on paper, but one is significantly more expensive just because it's closer to the water, in a better school zone, or in a neighborhood people recognize. That means buyers who are flexible on exact location have way more leverage. The people struggling the most are the ones who say, I only want this exact area. The people doing better are the ones willing to move 10 or 15 minutes inland. Another thing happening right now is that list prices don't always equal sale prices anymore. During the peak years, homes would sell at or above asking almost automatically. That's not the case now. Sellers are still listing high, but buyers are pushing back. Price reductions are more common, especially on homes that need updates or are priced like it's still a frenzy market. If you're a buyer, that's good news. It means negotiation is back, not everywhere, but enough that it matters. Now, let's talk about rentals, because this is where Virginia Beach quietly stays strong. Even though rent growth has slowed compared to previous years, demand hasn't disappeared. People still need places to live, especially renters connected to the military, healthcare, and service industries. What's changed is that renters have more choices. That means landlords can't just raise rent aggressively and expect people to stay. Properties that are clean, reasonably priced, and well located do fine. Properties that are outdated or overpriced sit longer. This shift is actually healthy. It pushes the market toward stability instead of burnout. Long-term renters are more likely to stay put, which reduces vacancy. For landlords who focus on keeping properties in good shape, instead of chasing maximum rent, this is a good environment. Short-term rentals are a different story. They still work, but they're not effortless anymore. The days of buying anything near the beach and printing money are gone. Occupancy depends heavily on location, property condition, and pricing strategy. Well-managed vacation rentals in prime areas still perform, but average properties are feeling more competition. This is where realistic expectations matter. Some owners are adjusting pricing. Others are switching to mid-term or long-term rentals. Now, let's break down who's actually winning in this market. First-time buyers are having a mixed experience. On one hand, they're not competing against dozens of offers like before. On the other hand, affordability is still a challenge because prices haven't dropped dramatically. First-time buyers who succeed are usually the ones who compromise smaller homes, older properties, or less trendy neighborhoods. Those waiting for a massive crash are mostly still waiting. Move-up buyers, people selling one home to buy another, are in a better spot. They benefit from holding equity while also having more time to shop. If they price their current home correctly, they can move without panic. These buyers tend to be more patient and strategic, which fits this market well. Investors are being forced to think more carefully. The easy deals are mostly gone. Cash flow still exists, but it's tighter. That means investors who rely on long-term thinking are doing better than short-term flippers. Deals need to make sense on paper now. Appreciation alone isn't enough. Sellers are split into two groups: realistic sellers and stubborn sellers. Realistic sellers look at recent comps, price fairly, and move on. Stubborn sellers chase yesterday's market and sit longer. Buyers can spot the difference quickly. One thing that keeps Virginia Beach from swinging too hard in either direction is its diversity. This market isn't dependent on one industry or one type of buyer. You've got military families, retirees, professionals, renters, second home buyers, and investors all overlapping. That balance helps prevent sharp drops and wild spikes. Another subtle factor is lifestyle demand. People still want to live near water. That desire hasn't changed. Even if prices adjust, coastal living holds psychological value. That keeps long-term demand intact, even when short-term conditions shift. So the real takeaway from part 2 is this: Virginia Beach isn't rewarding shortcuts anymore. It's rewarding patience, flexibility, and realistic expectations. Buyers who adapt are finding opportunities. Sellers who adjust are closing deals, and investors who focus on fundamentals instead of hype are staying in the game. This is no longer a market where you win by rushing. You win by understanding how pricing, rentals, and buyer behavior actually work right now. So, now the big question everyone asks, once they understand the market basics: what happens next? Is Virginia Beach heading into another surge, a slowdown, or just more of this steady, in-between phase? Heading toward 2026, the answer is honestly less dramatic than people want, but that's not a bad thing. Virginia Beach is shaping up to be one of those markets where nothing crazy happens, and that's exactly why it continues to attract buyers who are thinking long-term instead of chasing hype. One thing that's becoming clearer is that the market is no longer driven by emotion. Buyers aren't panicking, sellers aren't dominating, and that balance usually leads to slower, steadier price movement. Going into 2026, prices are expected to keep moving upward, but not in a way that shocks anyone. Think gradual increases, not jumps. That kind of growth doesn't make headlines, but it's what builds value over time. Interest rates are still a factor, but they're no longer the only story. Buyers have adjusted mentally. People aren't waiting for perfect rates anymore. They're waiting for deals that make sense. That changes behavior. Instead of rushing, buyers compare options. They negotiate. They walk away when numbers don't work. That puts pressure on sellers to be realistic, which keeps the market grounded. Inventory is likely to remain tight in the areas people want most. Waterfront adjacent neighborhoods, established communities, and homes in good condition will continue to attract attention. That doesn't mean everything sells fast, but it does mean desirable properties don't sit forever. On the flip side, homes that are overpriced or poorly maintained will continue to struggle. That gap between good listings and bad listings is only getting wider. From an investment perspective, 2026 looks like a fundamentals market. Appreciation alone isn't enough anymore. You have to look at rent stability, tenant demand, maintenance costs, and long-term holding potential. Investors who depend on quick flips or aggressive rent growth may feel squeezed. Investors who are okay with steady returns and moderate growth are more comfortable here. Short-term rentals are expected to stabilize further. The market has matured. Competition is real, and not every property works as a vacation rental anymore. Owners who understand seasonality, pricing, and guest expectations will still do fine. Others may shift strategies. This isn't a sign of failure, it's a sign the market is becoming more professional. One thing that continues to support Virginia Beach is lifestyle demand. People don't just move here for numbers, they move for the environment. Access to the water, walkable areas, outdoor activities, and a slower pace of life still matter. That lifestyle appeal creates a demand floor that doesn't disappear easily. Even when buyers hesitate, they don't stop wanting to live here. Now let's talk risks, because pretending there are none is how people get burned. Affordability is still the biggest challenge. Prices haven't dropped enough to suddenly make this market easy for everyone. Buyers stretching their budgets are vulnerable if personal finances change. That's why conservative buying matters. Buying within your means matters more now than during boom years. Another risk is assuming the beach automatically equals profit. That mindset causes people to overpay. Location matters, but so does condition, layout, flood considerations, and long-term livability. Not all near-beach properties perform the same way. Smart buyers look deeper than the view. There's also the risk of waiting too long for a crash that never comes. This market hasn't shown signs of collapsing. It's adjusting, not breaking. People who sit on the sidelines indefinitely often end up paying more later, not because prices explode, but because time passes and equity builds for others. So, should you buy now or wait until 2026? The honest answer depends on why you're buying. If you're looking for a quick win, this probably isn't the market for that. If you're buying for long-term living, rental stability, or gradual appreciation, timing matters less than the deal itself. A good property at a fair price usually beats perfect timing. Virginia Beach heading into 2026 looks like a market that rewards realism. It rewards people who run numbers, understand neighborhoods, and don't let headlines make decisions for them. It's not flashy. It's not collapsing. It's just functioning. And in real estate, that's often where the best outcomes come from. So the final takeaway is simple. Virginia Beach isn't a gamble market, it's a patience market. If you understand that going in, you're already ahead of most people watching from the sidelines.